bounce-back ability, isn't it?
It is.
Will the rally last? 50 record highs this year. What's its outlook for 2015, Naeem?
Thanks for having me again. I think the four more things that we have to watch when we're going into 2015. Number one is the Greece that you guys are talking about, and they're bringing that. And the second is the oil, the sell-off in the oil. We have to watch that one. And the global growth, Brexit. And there's something which not many people are focused is the earnings, like how the U.S. earnings going to be. Because remember, this is the first time that we will have earnings when there be no QE from the U.S. Federal Bank. And would these companies would be able to produce at the same pace what they have done previously. So generally speaking, we think that U.S., if as long as the GDP is above 2.5% for the next year, it is still a place for an investment. You could certainly put some of your money there. For Eurozone, it is really interesting. We think 1.1% is the forecast for the next year, but ECB is going to be extremely busy in buying quantitative easing, and they have to think about unorthodox method of buying sovereign bonds and corporate bonds. That is the only way for them to
And that's
boost.
the only way they can increase their balance sheet, isn't it?
Absolutely.
3 trillion euros, which seems to be the aim. How is Greece going to complicate matters, Naeem, for the ECB ahead of its January the 22nd meeting? Because by then we'll know if there's a general election forthcoming in Greece.
I think it's an excellent question. But my major concern is not Greece. We think the Greece will able to come up with some sort of a solution and they will strike a deal with the ECB. However, if there is a fallout of this entire situation, what is going to be the spillover effect? We have a much bigger economies than Greece when it comes to Italy. Anti-austerity is the biggest thing in Italy, and this can very well kick in Spain. So if there's a spillover effect after Greece, I think that is going to be the main concern for the market. And for that reason, Mark, and for that particular reason, we think having gold in your portfolio is a golden investment for the next year, and have a bit of a volatility index. I mean, yes, the volatility index has taken a nosedive in the previous past few days, but if you have invested in the volatility index, you would have made enormous amount of money. The index literally doubled what it started.
Is gold supposed to be a hedge against inflation? Where is the inflation?
Yes, gold is absolutely hedge against inflation. Gold is also a hedge against uncertainty. We have a lot of immense amount of uncertainty coming in next year, and that is the reason we think that the upside could be in gold towards maybe 1400, and the floor could be between 1000 and 1050.
But gold could be on this year for its second annual decline for the first time since 2000. You're forecasting, Naeem, a further crash in oil prices. We've had a crash, some would say. You think there's a lot further to go. Why?
The reason is the 2 million barrel on the extra this extra quantity on the market. We think that unless this part of the equation is addressed, the gold still has a room to go.
Who's going to address it? Because OPEC is saying, not us. You do it. Not OPEC producers. That's the message in the last few days, isn't it? From Saudi Arabia and other Middle East producers, oil ministers.
Absolutely. That is the political side of what they are playing. They're saying, that, OK, OPEC, we are not going to do that, and then the US would have to do it. But, Mark, if we look at the stats, how much US have produced during the month of November is nearly above 9 million barrels per day. And that is equivalent what Saudi Arabia is producing, which is the 34% of the OPEC. So, obviously, they have their concern. They wanted to maintain the market share. And the reason that they are not lowering the prices, and actually they are giving more discounts to the Asian markets, is the one primary reason that we think that oil still will go down Saudis or OPEC members will not cut their production.
And what's your price forecast then? How low could it go? We're talking 40s, aren't we?
We are, and with that is a bold call, but we think that the 40 could be a floor for going forward into 2015. But at the same time, 50 to 55 is another area for investors. If you wanted to take a Warren Buffett kind of a view and then you wanted to buy into this, because PE ratio for these companies, for the oil energy companies that we had ratings by the Fitch, I mean, these are interesting to look at it. And the way that you will filter out the companies, look at the amount of a debt they have, what is the production cost for these companies. I think if you kind of put these things under your vision and then you start buying them, that is a good investment for 2000.
I'm still there, going to come back to you.